everybody. Yeah, it's me, Buffy, and I am back with the third episode of the December Weekly Market Insight Series, coming directly from the Capital Markets Trading Desk right here at SunWest Mortgage Company. After a cautious start to the week, markets gained momentum following the decision from the Federal Reserve. Wall Street extended its rally as it looks like the central bank may be able to pull off a soft landing for the economy. The S&P 500 is set to near its all-time high, while the Dow Jones Industrial Average jumped more than 1% on Wednesday, surpassing 37,000 for the first time ever. The 10-year Treasury note yield dropped below 4%, also for the first time since August. The biggest news this week is the Federal Reserve Committee voting unanimously to hold key interest rates steady for the third consecutive meeting. The benchmark federal funds rate currently sits in the 5.25 to 5.5% range, the highest since 2001. The decision released on Wednesday also set the table for multiple rate cuts in 2024 and beyond. Investors rejoiced as Fed officials expect 3 rate cuts next year, totaling 75 basis points. The committee pointed out that growth in economic activity has slowed down and that inflation has eased over the past year, lowering its inflation forecast for 2024 to 2.4%. Chair Powell emphasized the projections are not a preset plan and said policymakers are not ready to take further interest rate increases off the table if needed to reject resurgent price pressure. Tuesday's anticipated consumer price index revealed that consumer prices increased again in November. Core CPI, which excludes food and energy costs, met expectations and increased 0.3% last month, following a smaller increase of 0.2% in October. It increased 4% from a year ago. U.S. producer price gains slowed in November. The Bureau of Labor Statistics Producer Price Index was unchanged in November after decreasing 4% in October. It was up 0.9% from last year, while the core gauge was up 2%, the least since January 2021. Even with the monthly gain, the numbers reinforce the notion that inflation is trending towards the Fed's goal. In U.S., retail sales unexpectedly increased 0.3% in November as holiday shopping got off to a strong start. 8 out of 13 categories posted increases boosted by lower gasoline prices and discounts. Mortgage rates continued to drop last week. The average 30-year fixed mortgage rate declined to 7.07%, its lowest level since July. The falling rates have led to an uptick in mortgage applications. The MBA Market Composite Index increased 7.4% the week ending December 9th. Refinance applications soared 19% compared to the week before and were up 27% on a yearly basis. Refinance application accounted for 39% of all applications. It is the largest share since March 2022. Purchase applications were up 4% compared to the previous week, but were down 18% from a year ago. In this week's Jobless Claims update, the number of Americans filing for initial jobless claims decreased by 19,000 to 202,000 for the week ending December 9th. It is the lowest level since October and near historic lows. Continuing jobless claims increased to 1.87 million for the week ending December 2nd. In international news, the Bank of England decided to hold their interest rate at 5.25% for the third time in a row. Meanwhile, the European Central Bank also kept interest on hold as inflation fell to 2.4% in November. Even though there were some expectations of rate cuts, the ECB decided to hold the deposit rate at a record high 4%. And that's the latest news brought to you by the Capital Markets Trading Desk. See you next Friday. Get outside or snuggle up close this cozy holiday season. Have a fantastic weekend, everybody. Buffy, out.